I think the U.S. is kind of a fully functioning zombie nation, and I think it'll probably stay like that for a while.
What do you mean fully functioning zombie nation?
Well, I mean, I don't know how much you interact with the public. I just listen to what people say, and I just think, I mean, this is like I live on some other planet.
E.B. Tucker, editor of the Tucker Letter, returns to the show. Let's get his outlook on the economy and markets. Welcome back, E.B. Good to see you again.
Thanks for having me.
I'm going to play for you a clip of Powell at the annual meeting at the Economic Forum, NABE. So take a listen to what he said here.
So if you look back over prior downturns, you'll often see that they weren't well predicted by GDP data, but they were by one or more aspects of the labor market. Now, we don't see that happening. There's really nothing that I can point to in the economy that suggests that a downturn is more likely than it is at any time. So we don't see that. But I would say seeing that there's more support for thinking that the GDP readings we get are solid, I think that does happen. It helps at the margin. That's not going to stop us from looking very carefully at the labor market data, though.
Okay, so nothing in the economy indicates that there's going to be a downturn. So why do they cut rates? What's your response?
What's so funny is that I grew up and went to business. Got a business degree in Greenspan era, and we called him the maestro. But I mean, this guy Powell is like a star quarterback, right? I mean, it's like he gets so much airtime that he's a real celebrity now, right? I mean, the Bloomberg screen that I have has Fed people on there all the time, like a dozen of them a day. I mean, I'm telling you, it's hard to remember, but 30 years ago, because I'm not as young as I look, that you couldn't name the governor of any other Fed bank, and you might have known Greenspan, but that's it. But look, this guy, I mean, if you notice, every day there's a new headline shifting the market one way or the other. Is it going to be 75? Maybe it's going to be 25. Could be 50. Could be 100. Do we need anything at all? Are we worried about inflation? So it's theater. I mean, every story needs, a boogeyman. It needs some element of fear. And what we're seeing is that they've got so many programs and so much drama. You and I met 2 years ago on a show, and I was telling you back then that their goal is to pull money from the COVID era out, all right, of the system. We were at 9 trillion at the top of the COVID printing, right? That was the balance sheet of the Fed, 9 trillion. Today, I'm not sure if you know what it is, 7 trillion. Okay, so we had about 2.2 trillion put in there. So we got 2 trillion left. And where you can see that, it's a repo market. That was 2.2 trillion. It's 300 billion now. It should be about 100 billion. So they have to keep everybody on the edge of their seat until they get that last 200 billion out of the market. And I think they're close. So whatever they do with rates, all it is to manage calm. It's like that guy that put the jet down in the Hudson River. Remember that guy? Sullenberger? This is what Powell's doing. He's trying to get this money out of the system without causing a panic.
Right. But what is his assessment of the economy, that there's no signs of a downturn? Do you agree with that?
Yeah, I mean, personal experience, I don't really feel it. I mean, I think everybody is pretty much frozen in place waiting for materially lower rates. I mean, the rates still like 4.8, on the short rates. It's like the curve is still inverted. It's still a bizarre looking curve, So obviously the market thinks this guy is going to continue slowly bringing them down. I don't feel a recession. I mean, I'm out and about dealing with people in all types of businesses, and everybody's just frozen in place, spending through money that they raised 2 years ago and waiting for lower rates. I mean, I think the real impact on the street level probably comes once they actually do lower rates and nothing happens. That's when it happens. But see, recessions are part of a capitalist economy. I mean, that's the deal. Is we had recessions last century. We really don't have recessions anymore. You know what we do is we have market panics. That's what we have. A recession was like 2 consecutive quarters of negative GDP growth. We're not going to ever have that again because we're going to stimulate to make sure GDP growth never goes backwards. So I think it's all talk. I really do. I think it's going to go to there's a panic, boom. And then all of a sudden you're going to see them run in and have some new type of program to fix everything.
What do you think about this continuing quantitative tightening that we're seeing here?
Yeah, I mean, how much can you get out before the market freaks, right? That's the whole goal. I've got this that's a good chart. I've got that chart in in the Tucker letter tomorrow coming out. Because if you notice, I mean, think about it like this. Back in the 2000s, that balance sheet of the Fed in 2000 was 600 billion. By 2008, it was 800 billion. I mean, all the tech like Musk and Bezos and Zuckerberg and all these made kind of mafioso guys, 200 billion is like the new, is like the new definition of rich, right? The Fed balance sheet was only 600 billion, like when we started this whole experiment. And the experiment's going to get bigger and bigger and bigger, right? So with 9 trillion, pull it back to 7. You look at that chart you just showed, what happens is it goes up when they have to solve a panic, comes down, and then boom, back up again. It's going to get bigger and bigger. I mean, the bet you don't want to make is that it's going to collapse, right? I mean, it's like that's the whole problem with the gold bugs. It's like this thing is, maybe it's going to collapse someday, but you're probably going to be long gone by the time it does.
It's like playing Jenga. You take these blocks out one at a time.
Yeah.
Eventually, the tower collapses, but we haven't seen such a collapse yet.
But you got a lot of tiles left to pull out. And the other thing is that I always wonder with the gold bugs. I'm like, why do you want the system to collapse so badly? I mean, do you realize like you're part of the system? I mean, it doesn't make any sense. So I think we got a ways to go. To be honest, I think you'd be surprised how much you can inflate calmly when you have a gigantic nuclear arsenal and control of the Western data markets. And look, I mean, the last 25 years, betting against this cabal has been a bad idea. I mean, you got to be, okay, I'm in Vancouver right now, right? You go around with these people that have got like a $2.5 million, shell company or something. They want to do that. I'm like, do you guys realize that this is a huge financial world now? I mean, you've got massive amounts of money being raised for big, high growth ideas, and you're running around town here with a 3.5-cent stock trying to talk about, turning it into a 5-cent stock. I mean, I get it. A double's a double, right? But what I'm saying is that like the world got really big and the mining industry got really small at the same time.
Okay, look, you're very knowledgeable about the mining industry. Let's talk about commodities now. So which of the commodities that you follow do you think have the most upside right now, given the trends that we're seeing in the economy?
Look, the number one thing I talk about in the newsletter, ebtucker.com, is that most people that are making bets on commodities have no idea how the commodity market works. I have a friend who can go unnamed that runs a commodity trading fund. I met with him last week. He actually, I don't think, understands how the commodity business works, and he's got a pile of money to invest in. The thing you got to understand, it's helpful to go and watch. There's a show called The Prize, there's a book called The Prize, but there's a show called The Prize from the 90s. And what you'll see in about episode 7 of 8 is that at some point in the early 80s, mid 80s, the U.S. figured out that they could effectively fix the price of oil using the futures market. And so you listen to Jurgen explain this, and it solved a lot of problems because no longer could the suppliers of oil mess with the oil market. Okay, because if you remember, what was happening is you would have like a country in Northern Africa, you go unnamed, stop producing or something, and it would gyrate the oil market, and then it would send the price swinging one way or the other, and everybody in Texas would go bankrupt. So we figured out that we could set the price using the futures market. What you do is you would overwhelm the price to one side or the other and fix the price. Now, why is that important? Well, it's important for a very interesting reason, because about 8:30 every morning, the gold price does something that nobody can explain, which is like half a year of gold production gets sold or bought at a certain time instantaneously. And the gold bugs all say, well, who would be selling, whatever. They're not selling. What is the futures market? It's very easy to control the price. And so when you look around the commodities market, you have to understand, like, look at nickel, for example, right? There is a material supply problem with nickel. Price of nickel, $7 a pound, $8 a pound, whatever, less than 10. Price was $10 a pound several years ago. It shot to 50. All the trades got canceled. There was a bunch of lawsuits. All these hedge funds are suing the LME, all this stuff. And the price is back down to like 7 to 10. Aluminum had some problems earlier this year. Copper has had some problems. Gold has had some problems. I'm going to tell you something, man. The commodity prices are not moving. The supply issues are major problems, right? And if you think it's a problem today, there's major problems coming down the road, and it's untradeable. The reason why it's untradeable is because what happens is that the futures market pegs the price of the metal, not the buyers and sellers. All right. So the buyers of gold don't set the gold price. Okay. The buyers of copper don't set the copper price. It's very hard for people to get their head wrapped around that. But the reason it matters is because if you walk in to the market thinking that you're going to play upside in one of these metals, you're going to lose. And the reason you're going to lose is because the futures market is massively larger than the actual market for buyers and sellers, which makes it extremely difficult to make money. And that's why, David, the sector is so small, is because you don't have you have market economics like in the tech scene, okay? But you don't have that in the commodity scene, because a long time ago, we figured out that if commodity prices gyrate wildly, people panic and they start hoarding. And if you notice, there is no hoarding because there is no problem. Even when there's a supply problem, there is no problem. Now, someday that's going to change. But what I'm trying to tell you, having been in this business for a long time, is that it's a very complicated bet to make, and you're probably not going to win on that bet. Or if you are, it's going to be luck. And if you get lucky, the thing to do is take that lucky money and get out of there. All right? I hope that makes sense.
The fact that the GDX is not grossly outperforming the gold bullion right now, what is that? Is that a value opportunity or value trap?
No, absolutely not. So the thing is that I'm telling you, the people that are in that industry don't leave Vancouver enough. All you got to do is meet with a generalist in New York and let me ask you a question. There's no wrong answer. Why do you not buy a gold stock? And let them tell you, and they'll tell you right away. They'll tell you. They're like, I'm not touching that. Bad management, bad decision-making, failure to perform with the commodity. If you give me a fix, I'm willing to listen. And the problem is that the mining company boards go back to Vancouver and drink the same Kool-Aid, and they don't ever produce anything. Start running the company for the benefit of the shareholders, and you'll see a radical difference, because people are receptive to that, but nobody will do it. I mean, David, it's not one company in particular. Nobody will do it. Seriously. Nobody's willing to do it. I'm telling you. And now, someday that'll change, right? But what all these people say is, well, we're about to have a huge rally. And it's like, yeah, we have had a huge rally. I mean, an ounce of gold is so expensive if you think about it. Like, go back 5 years ago, all right? So I knew you 5 years ago. You ask a gold CEO on your show, what would happen if you took gold to 2,600 to 2,650? They would say, oh, we'll have money coming out of our ears, but it's not happening. Where's the money? And you can't say, oh, well, the oil price is $75. Didn't happen. Oh, well, ESG. Hey, I mean, everybody's going to deal with ESG, right? It's how you run the company. That's what it comes down to. Well, I don't want to get off track here. Here's my point.
Yeah.
We're shareholders. That's the deal. What we're interested in doing is buying shares of companies that are going to perform well, and management's going to be held accountable. And there's no accountability in the gold sector, and people should not buy stocks in the gold sector until there's accountability for performance. And just so we're clear, okay, this opinion that I have is unpopular. In fact, I've been pushed off boards because of this opinion, okay? I'm not on any boards. I haven't been for like over a year now. And I'm telling you that this opinion that I have is not popular, because when you're in a kind of like a self-dealing scenario, it's not popular to say, I got an idea. We should run the company so the shareholders benefit. No, get out of here, okay? So what I'm trying to tell you is that as a shareholder, like as somebody that bought stock, in companies that I was involved in like over 100 times, I'm not happy. I want to make money. I don't want to buy stock and have it go down 30% a year when the gold price goes up 30% a year. I'm not happy with that. And nobody else should be happy with that, David.
Okay, here is a chart from courtesy of Crescat Capital. Apparently, cash flow margins this last quarter from the large gold mining companies, the large ones, generating cash flow, highest margins in the S&P 500. What's your reaction to this?
That's right. And so remember, energy was in this position too, right? Exxon got booted, from the major indexes. Chevron was booted from some of the indexes, and margins exploded. And the CEOs of those companies said they rebranded themselves. And what they did is they said, we are making so much money that we are going to give this money straight back to shareholders. That's what we're going to do. And they stuck to it, David. They did what they said they were going to do. And the gold CEOs should come out and do the same exact thing. Instead of doing crazy things with the money, they should say, we work for the shareholders. And I'm telling you, David, the first company to do it is going to see support because people respond to that message. Fattest margins in the S&P, lowest stock performance. I mean, all these companies that have no earnings, they're trading at like massive multiples of sales, are flying higher. And the reason why is because people are receptive to the message. But the gold CEOs go out and talk. They have the fattest margins in the business. Nobody buys. And here's the thing. If you're watching this, you say, what does all this mean to me? I'll tell you what it means. Is that like personally, I sold starting like, a year and a half ago or something, most of my gold stocks. And I got out of them because they're not performing and gold is a better investment. Gold is running higher than the gold stocks. That's going to change at some point. When it changes, you can get involved, right? You wait till you hear the music before you dance. That's what you do. And right now, it's like you are not hearing the music. You're not hearing it.
The Fed just cut rates though, and now we're entering an easy cycle. Is that when the music starts turning?
Well, you would think the gold price is signaling that. And that's what everybody misses about the gold price. But that thing just walked up a flight of stairs this year. It walked up and not based on demand. How interesting is that? I mean, you can get all the gold you want. That's what's so crazy. Imagine if people did what they did in the 70s. They started hoarding gold. It would be mayhem. I mean, in the US, for example, I'm like the gold guy, right? Nobody has any gold, believe me. Like, sure, maybe some people that have gold. Maybe I know some people that have gold. But the average person has no idea why you would want gold, what you would do with it, or where you would get it. It's really, really interesting. So just imagine what would happen if they got worried and they tried to buy gold. Now, I don't know that will happen because I think we're so far gone from that type of way of thinking. I mean, I think people see digital money as like a safe haven, right? Or I don't know what they do with their money now, but I know what they do is they tip people. I watch people at the coffee shop. They give like gratuitous tips to the baristas now. But you have a different era. In the 1970s, people were kind of like post-war era thinking, and so they started hoarding. Imagine if that happened. I mean, it would be crazy. They've somehow kept the gold industry quiet, right? It's like everything is, it's gone backwards while the world has gotten really, really large.
Okay. Well, look, since you brought it up, I've known you for a while. You've liked the mining sector. At what point did you change your mind?
2000, like early 2023, I was a big seller. As you know, I just wrote a new book that's out now, and I kind of tell the story of how I got here in the business and what happened. And I was on some boards. I was a big seller. I was moving out of the industry, and then I was asked to leave boards, and I really changed directions. But part of the problem is like I'm not like an inside guy in the company. Like I'm not like a Vancouver guy. I'm an investor. So I got involved in 2016 in what I thought was a really good idea, and I thought we could kind of make something big. And I put a lot of money behind that idea. And when it failed to perform, I pulled a lot of money out. And so I'm still waiting for the industry to prove that it's worthy of my money. It's like sometimes things don't work out. And that's the story of life, right? I mean, that's the stories I tell in this new book, is that sometimes things don't work out, which is okay because something else works out. Now I'm starting to investigate other things that I can do that I think are more interesting now, which, hopefully you'll have news on that, at some point soon. But the point is that the industry has not earned your money. Seriously. I mean, it's got to perform, right? I mean, you're in this era where there's so many bull markets that happen so fast, and to think that you can't tap that, it means that you can't tell a good story. And it's really a shame.
How do you feel about critical minerals? How do you feel about things like lithium? We need them for batteries.
Yeah, I mean, you look at like what governments are doing with lithium deposits. I mean, they're really trying to control who produces, where they produce, when they produce, who gets the supply. You're running into this new world where you have like this kind of like pockets of cooperation. So you have a country that'll produce its lithium. It doesn't want to sell it to certain other countries. There's like a protectionism. Do you notice this? There's like people are saying like, we're not going to let, this or that region.
There's a trade war going on between China and the US. Yeah.
But it's more than that. I mean, then you got like, what does India do? I mean, in some areas they cooperate with the US, in some areas they don't, and then you've got kind of like Eastern Europe is in a position, not just what makes the news, but a little further south where you've got areas that have some mineralization, and they're trying to figure out who they're going to be aligned with. I mean, and so yeah, I mean, the problem with this stuff though is that like a lot of these things don't really trade. I mean, it's hard. It's really hard, to like. Lithium is very project centric. I mean, that's the issue with it, right? And so it's like, how do you really make money on that? It's almost like the nations are saying we need this to strengthen our system. And if people could just back up and see that you're in this like zones, these zones are collecting power and cooperating or not cooperating, and you think to yourself, I mean, is this bullish or not bullish overall? For a market-based system. I mean, it's not very bullish. I mean, we actually have globalization in reverse, and that's only starting. It's just starting right now. It's really just starting. I mean, wait till you run low on the lithium and see what happens. That's like when things are going to get really crazy.
Okay, so we have a Fed easing cycle. We have the election coming up in a month. We have a war breaking out in the Middle East that a lot of analysts are saying could escalate. Oil just broke up to the outside. Putting all this together, I mean,
and we have Florida being decimated, right? I mean, everybody in the U.S. hates Florida. I mean, my kids, we went to Vermont this summer, and they within 2 days figured out that they can't tell anyone they're from Florida because everyone hates Florida. And you say people in Canada are like, what's the big deal? Well, look, I mean, you got like 22 million people living there, like tons of net worth and tons of retirement.
By the way, are you expecting the jobs report to reflect the hurricanes?
You got to think it does. I mean, I'm telling you that it's really hard to insure property in Florida. It's really hard to insure business assets. When things get leveled, nobody's coming into your shop, nobody's buying property. I mean, I'm telling you, Americans have all their kind of like hopes and dreams built up in their property. And when you had a property that you got a 3% mortgage on and you said, I'm never selling this, and then it gets, 3 feet of water pushed through the living room, that thing is worth zero. Okay. It's no bid. And everybody says, well, that's only in Florida and it's a bunch of like, Republicans, so they deserve it. Okay, fine, maybe. But these things have ripple effects. And when someone can't sell their Asheville, North Carolina getaway house washed down the side of a mountain, and then their Florida house goes no bid and they're waiting for a FEMA check, this is a big deal. And that means these people aren't moving, and they have like a giant hole in their net worth that they didn't see coming before. So just wait and see how these things create bizarre outcomes. I mean, this type of stuff it's always the butterfly effect that kicks things off, and so there's always something that kicks things off, changes people's mood. There's a lot of complacency right now, and you get hit in the side of the head with something you didn't expect, and it kicks off a daisy chain. So I think you say we're entering an easy cycle, maybe, but real estate deals don't work. Okay, companies that raised money when the market was hot are spending through that money and are still unwilling to make real changes, and so you're in a holding pattern, and the Fed is still pulling money out of the system. And so until that's done, I think you want to be very careful. I mean, it's not the time to go out looking for high risk investments. Everybody from me always wants a ticker symbol or something. It's like, why don't you just be patient? I mean, we're in this scenario where you have these panics. You have these panics every once in a while, and then the Fed jumps in with a Botox injection to firm everything back up. And why don't you wait for that? Because probably between the election and all the natural disasters and what's going on in the rates market and the stock market that we all know, as soon as there's unemployment trouble, the stock market's going to go down, okay, even if it's temporary. Why don't you just wait? And people just can't wait, David. And if you can't wait, then dive in and go for a swim in the hurricane.
We're speaking ahead of Thursday's CPI report, so we're speaking on Wednesday, a day before that. Medium term, what do you think the CPI is going to do?
It's going to show a lot lower than people think. And now, I don't think long-term, obviously, prices are going up. But in the short term, CPI is down, inflation's down, the way they measure CPI is down, and it has nothing to do with the fact that at the grocery store, you're spending more money. The Fed doesn't measure that. What the Fed measures is the rate of growth in the prices. And the rate of growth is down, and it's going to stay down. The way they measure it, it's going to stay down. And if they got to revise it up later, they'll do it. But expect that number to come down, and watch how within a nanosecond of that number, the gold market will move. And you just say to yourself, I mean, you got to stay out of that. That's a crossfire. You got to stay out of that.
Okay. What are the major risks you're looking out for as an investor?
Look, I mean, what you don't want to get caught in is these brief drawdowns, right? I mean, remember what happened in 2020? You lost a third of the stock market value in 3 weeks. Fed jumped in, shot it back up. You know, you have these little panics, these little mini panics. You had one in Q4 18. You have these little times where you just do not want to be standing in front of the market. And so we're probably due for one of these, because a lot of people are very, very complacent. Even though they know the market's high, they're still 100% invested. So do the opposite. And it doesn't mean go short. What it means is that just have a little bit of cash, because when Bank of America traded for 3 in 2008, only one person bought it, and that's Warren Buffett. So if you have cash, I mean, Buffett has cash right now, right? He's like sold out of all this stuff. He's got more cash probably than the Treasury does. But have some cash and be ready for the quick panic. They don't last like they used to. They don't go, you don't want to short it. It's too hard to trade it, but just wait. And then you can have a list of things you buy. In the Tucker letter, we have a portfolio called the trustee portfolio. We have stocks that we absolutely love owning. They've done quite well. We have some, couple of triple digit gainers that are like companies that you've heard of, but you probably never thought to invest in. I think they'll do fine in these types of panics.
When the economy turns south, inevitably, we will have some sort of downturn at some point. I'm not saying now or next year. What do we do? What are the defensive plays to make besides gold? We've talked about that.
Yeah.
Already.
So the thing I think people don't understand is that when you initially had a 401k, when you first went to work, you had to opt into the 401k. Now, when you go to work, you automatically get a 401k. And you have to opt out of the 401k. So everybody that goes to work is putting money in, and it's buying stocks, and it loops the stock up. So I want people to understand that if unemployment goes up a bunch, right, what happens is that money is not flooding into the market anymore. And so the opposite happens. It means that you have money that's not going into the market. And then if people say, well, now I'm hurting, I got to take a loan from the 401k, then the opposite starts to happen on the downside. And it can happen extremely quickly. And so when people look at the unemployment situation, it's really important to realize that the Fed is thinking, okay, the number one thing we cannot do is let unemployment rise dramatically, because it means it'll send the stock market down. And Powell's a private equity guy, right? So remember, all these private equity deals are pretty frozen right now. They're kind of stuck. And so these deals can't stay stuck for very long. It's why he has to start easing now, is because you can't have these things too frozen for long, because the private equity guys have got to close the fund after 5-6 years, right? This is the way this works. So, I mean, so it's a lot going on here. I'm telling you, it's hard to manage. Ask the Soviets. It's hard to manage an economic system. The free market system was different, but now they're managing the system. They're fine tuning everything. I mean, this is a hard job.
Well, okay. Do you think that there's going to be major changes in the way people invest in commodities in particular? I know you're an expert in commodities. Going forward, with geopolitical tensions wrapping up, with the world order changing, some would say, with the rise of BRICS, for example, are there specific areas in the commodity space that you think will do better than others?
Look, I think it's very hard for people to play in that space, because what's going to happen is all of a sudden select markets and they're going to have blowups. If you notice, like we talked about earlier, what happened with nickel, it all of a sudden went from 10 to 50 because some hedge funds figured out there actually was no nickel, and the price blew up to 50, and then the exchange canceled the trades, and now it's back under 10. So, I mean, how do you play that? I mean, I just don't, you don't go buy a pallet of nickels, from the Dallas Fed and stuff it in your garage or whatever. It doesn't really work. I mean, and then you say, well, can you buy a nickel company? I guess, but the companies really don't do a good job, like we talked about, of pegging themselves. I think the problem with the commodity market is it appeals to people that are quote unquote rational, and then it doesn't perform. And so it becomes very, very, very difficult to play that. Now, maybe that's going to change. Like, I mean, I've tried to play it with royalties in the past. It's been very difficult because sometimes reasons that have nothing to do with the commodity. But I mean, look, I think so far it hasn't earned my capital. I mean, that's the issue. And I think people, they struggle to understand that. They just want it to work so badly that they're unwilling to look at facts.
what if we had to speculate which sectors or assets, you don't have to get specific tickers, but which assets or sectors would do the best in 2025,
Look, I mean,
2025's winter?
I'm telling you, I'm looking at my physical gold holdings, and I'm just like, this is unbelievable. I mean, I've never liked kilo bars so much in my life. I mean, you go up, you just mentioned 40% plus in the last year. I mean,
Yeah.
it's like, how easy is that? I mean, yeah, obviously, like in the newsletter, we've got non-resource equities that have done quite well this year. But when I look around, if we have some market adjustment, if we have some rotation where, could the dollar kind of softens up and we have some, political change and these things start happening. And I just say, what's the gold price going to do? You put it over 3,000. I mean, I'll buy that. I mean, I just think you look at $3,000 gold in 2025 and you just think, I mean, that's the easiest trade on earth. And nobody's in it, David. Nobody. Now, if I go to New York and I start hearing guys in Midtown talk to me about it, I'm going to be worried. But right now, everybody thinks I'm an idiot for having the gold. And then they don't even know that it's up 40%. It's crazy.
I've heard that before because probably the guys in Midtown are looking at tech sectors. You're making also easy gains on the tech sector.
Definitely.
Right?
And you got to make those gains. So here's the thing people don't get is that like that's been a massive source of wealth. I mean, honestly, we've had cybersecurity names in the Tucker letter. It's been huge for us. Huge. I mean, it's like these people over here banging their head against the wall in the gold space, where the only people making money are the CEOs. And physical gold, it's like Bitcoin's had a great year. Nobody talks about that right now. It's had a great year. Remember that thing was like a year ago right now, it was like in the 30s. And that's pretty crazy to think about, right?
Are you making
it's had a great year.
Are you making any AI plays?
We had some attention in AI and we don't right now. I mean, it got a little bit hot. I mean, it got a little too hot, and I think for us it was, we kind of like shifted away from that because I think it got a little crazy. There's going to be some big winners in there. I mean, there's going to be Musk is going to do well in there, and OpenAI is going to do well, but there's a lot of fluff, and we felt like it was time to refocus on some other more practical.
Right,
I think we can come back to that.
Final question. Would you change your investment strategy or philosophy depending on who wins the election?
No, I don't think so. I think I truly don't think it matters. And I wrote about this last issue and I got a lot of angry emails back. People said it does matter, but I'm not sure that it does. I mean, I think the U.S. is kind of a fully functioning zombie nation. And I think it'll probably stay like that for a while.
Well, what do you mean?
I don't think.
Well, I should have led with that. What do you mean, fully functioning zombie nation?
Well, I mean, I don't know how much you interact with the public. I mean, people might be surprised that I didn't tend to get around with the hoi polloi pretty well, and I just listen to what people say, and I just think, I mean, this is like I live on some other planet. I mean, it's just all you do is print a headline about you're not going to have access to this or that, or somebody's going to give you a free weight loss drug, and people are just zombified. I mean, they're headed to fight whatever battle you want them to fight. And I think that the U.S. does this thing with taxes, right? Where people think that one candidate's going to, do this or that. And the reality is they always manage to collect 18% of GDP. I don't know if you've ever seen that chart, but since Nixon, they've collected about 18% of GDP in tax. And so if you're the government, you just want GDP to grow, because you get a raise every year. If GDP grows 5%, your taxes went up 5%. Your tax collections, right? So I think people fight about the ins and outs of it, but all that does is line the pockets of the congressional guys that guys and girls that get lobbying attention. So it's just the same. It's just going to be the same old thing. I mean, I wrote about DC this summer a couple times. I mean, I went to DC with my kids, and we met with a bunch of people I know there, and I have a cousin running for Congress, and it's just this thing never changes. It just never changes, and I don't think it's going to change. I don't think it matters what flavor.
Is the average U.S. consumer in trouble? EB, that's a
little question. One more thing I want to say about politics is that if there is regime change, I cannot wait to see what happens to my New York friends who are like, I mean, you absolutely cannot be anything but a rabid liberal in New York. And if you're not, then you really need to pretend that you are, if you want to have any friends. It's very interesting. So I cannot wait to see what happens if there is change. These people, they might have like a nervous breakdown. So anyway, what were you saying? The danger to people?
Consumer spending. Are you concerned about
Yeah,
the average
definitely.
consumer spending less next year? I mean,
Definitely.
consumer spending's been reaching new all-time highs every quarter, right?
I think so the data I saw on the Bloomberg recently is that people are making so many payments on things, right? I mean, I buy specialty coffee and they like $100 order to ship to me, and they're like, "Will you make payments for a year?" Can you imagine making payments for a year for coffee that I'm going to drink over the next like 10 days? It's unbelievable.
People financing coffee? Is that what you're saying?
It's crazy. Yeah, it's exactly right. And so coffee beans. So what I think has happened is people have continued to live a lifestyle they can't afford, and it's catching up to them. And I think they're still paying off debt probably from last holidays. And so far it's all right because they're still working. But I think there's going to be some pressure there. And, like this hurricane is pounding Florida, we have the Tucker Letter offices there. Just so you know, it's really interesting because obviously I'm not thrilled about this, but I've never bought too much property, meaning like I've never bought an office that I can't afford, if that makes sense. Like I've never been like, let me stretch and buy this office with a fountain in front that I can't afford. So if you live your life that way, it's a little bit easier to absorb the downturns because you're not living like you're making a rap video or something. So that's my suggestion to people, because don't finance your coffee. Like pay for the coffee.
Yeah. Okay.
Just pay for it and enjoy it. Don't pay for it over like 12 months.
It's interesting you bring that up because somebody else was telling me the other day, everyday household items, like people are asking, do you want to finance, this
lemon pledge?
Yeah, well, whatever it is he was buying,
yeah.
He was like, no, I'll just pay cash. Like, you want to collect interest rate on my lunch? What?
So in this book that I just put out, that's available on everywhere, I write some stories about like my upbringing, and I grew up in a certain environment where people buy here, pay here, and I think people like should read that, because I had a different perspective as a kid on that. I mean, that was what put food on my table was buy here, pay here, and repossessing stuff. It was kind of fun to grow up in that, but also like it shapes you to where you're not. I do things whenever I want to do them. I just do them assuming that I'm going to do it now, and that's it. It's not like, so you got to be really careful, because otherwise you paint yourself into a corner. And rich people do this, by the way. They get themselves in real serious predicaments, and you see it all the time.
What is the trigger for an economic downturn that we haven't seen yet?
So I think there's going to be a point where people aren't going to work, okay, or they're making less money. They're putting less money in their 401ks, and that then sends the algorithms negative. Instead of money coming in, there's money going out. And then the selling that, see, people just do not understand this, but 40% of the market is passive. So when you start having that money come out, the computer says, money's going down now, trade it down. So it goes really fast. And then people have margin loans. See, if you buy a house for like $10 million, I don't know if people know this, but you actually don't pay for that. What you do is your Morgan Stanley guy tells you, we'll loan you the $10 million. You can borrow against your stock holdings at SOFR plus 100 basis points. And you say groovy because, tech stocks always go up. So I'll just borrow against them. And then when all that happens at once, and then your loan gets called and you can't sell your place because some guy from Florida was going to buy it, and then he has no money now. And it all happens in like 3 weeks. So like, that's why you don't want to be trading. That's why you want to make some popcorn and like watch it. That's what you want to do.
Interest rates are going to go back to zero? Are we going to get another? No,
I don't think so. No, I don't think so. I think they're going to try to take them back to zero, and then it won't work. There'll be something new. It'll be something new.
Cheap money is over. We've had a decade of cheap money.
They're going to talk about it. Yeah. They're going to try it, but it's not going to work, and they're going to do something else.
So the consumer
yield curve control. Yield curve control. That's what it'll be.
So no more car purchases. No more mortgages. No more car loans.
Look, the car loans are expensive right now, right? But you still get a car loan. It's just that like what they'll do is they'll start controlling the curve to where they'll spend a lot of money trying to make the curve slope upward, like going up a hill. And that'll last a few years. So I mean, all these things are chapters, David, in a book, right? And the book is like, the USSA, Communist Manifesto. It's like this period right now. If you notice, they keep adding more and more layers of control onto what used to be a market system. That's the deal. I mean, I'm telling you, you pause and you time travel back to the 80s, and you tell someone that the Fed has thousands of employees and hundreds of different programs to manage everything from spending, price rises to everything in the bond market to QT, QE. They've got acronyms for everything. You would not, your grandpa would not even believe you. He would think you're crazy. There's no way. It's a sci-fi movie. You say, no, it's true. Every few hours there's a Fed governor talking on the television about something.
Okay. We covered a lot of ground today. Thank you very much. E.B. Tucker, Tucker Letter. Where can we find the Tucker Letter?
ebtucker.com for the Tucker Letter. You can read it for free. You're crazy if you don't read it. And I got a new book out on Amazon, not for sale, How to Survive and Thrive in a World That Wants to Control You. And it's a personal book. It's a somewhat sensitive book. Some people thought I might regret writing it, but I think the stories are important. I think,
what did you write about? What do you mean it's a personal book?
I tell stories that aren't, what you're supposed to do is to tell only stories where you started with nothing and became wildly successful and you're like the hero. But I didn't do that. What I did is I told how this is, I have little eras of my life where I go, like a wave, like a little down and then up higher and a little down and up higher. And the down periods are really important and should not be overlooked, because in those down periods, what happens is I make huge strides, and then it makes the up period higher. And so if you avoid all those things, if you use a filter on all your Instagram pictures of your life, you miss all that. And that's the good stuff. And so if you want to read about that, and you want to read about, some odd things that happened to me when I was younger, and, I was a dropout and all this stuff, there's some funny stories in there. And I took the risk of sharing it, because if I died suddenly, I would want my kids to read those stories. And the reason I would want them to read them is because I would want them to know that if you're going to be successful, it's going to be bumpy. And that's all right. You don't have to be ashamed of that.
All right. We'll put the links down below. Thanks very much, EB. Good catching up. Take care.
See you soon.
And thank you for watching. Don't forget to like and subscribe.